Max, good morning to you. Nice to see you, sir. What did you think of the fact that the Italians are now getting 3 years' money for nothing?
Well, I think that's the result of a massive injection of liquidity in the bond market. And of course, Italy, by being one of the countries with the highest debt, is benefiting from that. I think that was the purpose of what the ECB and in general the European authorities have been doing in order to support the periphery in the face of COVID-19.
Okay, fair enough. Look, you've furnished us with your UBS Annual Reserve Manager Survey. I mean, they must be absolutely tearing their hair out of these yields. What are they saying to you, sir?
I mean, it was very interesting. Actually, we've been running this survey for more than 25 years. This was the 26 years. And of course, this is a special year due to the COVID. I have to admit that we were wondering what would be the impact of COVID on the central banks as investor, and we're talking about reserve management. There are some important takeaways. First of all, the impact has been relatively limited, both in terms of the level of reserves, but also in terms of the risk appetite of central banks. So this is very remarkable, and there's a big difference compared to the crisis in 2008 and 2009. Second, what we saw is that we saw a clear trend towards further diversification. That was another remarkable outcome because, of course, we were expecting a little bit of sort of a pause in the secular trends towards the inclusion of more asset classes in the asset allocation of central banks. One example is equity. Then, of course, when we talk about the concern, the low yield, the negative yield is the top concern for central banks. As you know, despite the massive diversification that we experienced over the last decade, still the bulk of assets of central banks is invested in public bonds and over fixed income assets. Second, last point I would like to make is about the currency. We were very curious to see if the COVID and what's happening in the US is having an impact on the demand of US dollar denominated assets. Of course, first of all, Treasury. We have not seen yet any real negative impact. On the other hand, we saw the marathon of the RMB rising towards the reserve currency status continuing, and we estimated, based on the response of the survey, that the long-term target allocation to RMB fixed income is around 5% globally for central banks.
Look, there's a lot in there, Max, as well, but I want to congratulate you and the team at UBS. You found a new word for me, but I haven't heard of. It's globalization. Globalization. Yeah, it's a nice word.
Well, actually, we have not invented. Actually, it was invented by the economists. So we could talk about deglobalization if you want. But we wrote a very nice paper together with actually my colleague Philip Salman from my team, and also Arturo Bris, who is an IMD professor, is the head of the competitive center at the IMD, the Lausanne Business School. It's very interesting. When we start writing the paper, we were very gloomy about globalization. Then we start writing the paper, we look at some data leveraging the IMD data set, and we discovered that in the end, we don't think that this is the end of globalization. We just think we are experiencing an evolution in globalization, which of course the COVID-19 has in some way enhanced. So we think globalization is going to be different. We are going to see more regionalization, it's going to be less energy intensive and more digital. Of course, and the main conclusion of the paper is that there will be winners and losers, and that's what I think investors should pay attention to.
Yeah, okay, I'll go with that. A change of leadership. This is going to be bad for the dollar then, yeah?
Well, it's not. I don't know. It depends very much on which type of policy will be implemented following the election. It's very difficult to say how markets will react. Some history can help a little bit. Normally, we see the Democrats president tend to have a positive impact on the stock market, but also we think that, of course, a Democratic president would have an impact on the level of taxation on corporates going forward. I think the most important factor is the way the U.S. economy and the U.S. as a political leader will position itself following the election. From that point of view, I believe that a Democratic victory probably would in some way reduce the risk of a further escalation in, for instance, in trade tension. But I don't think the China-US geopolitical confrontation is going to change very much. It might change the rhetoric, but we think that this is a future which will remain for many years to come because it is a global competition for global leadership.